I think investors want to see more. I think we have had a track record of delivering performance in the past years, but over the more recent years, we haven't done as well because of competition.
I have a feeling that things are going to change quite quickly with regards to Alibaba. Now, quite quickly doesn't mean next day or next week, but I think this year you're going to see Alibaba's business change faster than before, meaning we're going to see a reacceleration in revenue growth and in profits, because we know that the stock has been underperforming, to put it lightly, for quite a while. Actually, today, if you look at the stock right now, it's under $70. Market cap, $169.5 billion. Since the start of the year, it's down 10%. Since last year, it's down 25%. And if you look at the valuation metrics, of course, it is extremely, extremely cheap. I mean, of course, we know it's a Chinese company, geopolitical issues, delisting issues, well, risk, should I say, TikTok, etc., etc. But I mean, sometimes for a trade, you don't have to be a long-term investor, because if this thing turns, if the sentiment switches, then you're probably going to make quite a lot in a short period of time. It's just my guess, not investment advice. But if you look at these metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow, and then especially price earnings to growth at 0.68. I mean, if this was an American company, which it is not, but if it were an American company, I think we would all buy quite a lot of shares of this company. Now, looking at the average analyst price target, it has been coming down for quite a while, but it still sits 50% higher than the price we're at today. It sits at around $105. And with all of that, by the way, in the last 5 years, the stock is down 61%. Now, going back, the price target, 50% upside from the price we're at today, and that's taking into consideration the analyst estimates for the coming fiscal years. You're not seeing here crazy growth, and that's the thing. With regards to Alibaba, you don't really need to see crazy growth for it to be valued at a higher multiple. Because if you're looking at sales growth for fiscal year 2024, only 3% or so. EPS growth, 6.75%. Next fiscal year, actually next 2 fiscal years, sales growth of around 7.6, 7.7%. EPS growth next year, basically flat-ish to down. Then a reacceleration in fiscal year 2026 by about 13%. So not crazy growth. And again, you don't really need that much growth when you have an EV to sales ratio of 0.9 times, forward PE 8.5 times. Really, not a lot needs to change for it to be valued at a higher multiple. Now, Joe Tsai also went on a podcast, a very interesting podcast. I'll link it down in the description below if you want to listen to that. Again, talking about the challenges inside and outside the company. Very informative podcast if you're a holder of Alibaba or maybe you're interested in that. Because again, we know it's a Chinese company, Chinese stock. You don't have the same voting rights as a traditional US stock. I know there are risks. I know fully well. But to say that there is no interest in Chinese stocks is just being ignorant, because again, I'll use the same example. If you're looking at the major competitor, Pinduoduo, right, parent company of Temu, the stock itself has been doing quite well for a while. Now, the company obviously has been growing quite fast, much faster than Alibaba. And so, of course, the stock will react accordingly. They even talk about the competition. They even talk about Pinduoduo, how they've been doing well. I think Jack Ma actually congratulated Pinduoduo when they surpassed Alibaba in market cap. So they are acknowledging the mistakes that they have been making, which is why I think that the acknowledgement is the first step. And then the second step is, of course, actually improving the business from a profitability standpoint, from a growth standpoint. Yes, last year there was a huge restructuring at Alibaba, but since then, not a lot has changed. Maybe now it will. Now, before we continue, if you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. We're well on our way to reach 40,000 subscribers. Thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, Jack Ma resurfaced with a note after Joe Tsai went on the podcast. He wrote something, so I'll read the most interesting points and then let's discuss that. So the title of his post was called "To Reform and Innovation." Now, this is translated from Chinese to English, so of course there's going to be some tiny mistakes, but hopefully not such a big deal. So Jack Ma believes in the article that the core change of Alibaba in the past year is not to catch up with KPIs, but to recognize itself and return to the track of customer value. By attacking the problems of large companies, Alibaba has returned to putting efficiency and market first, becoming simple and agile. To me, Amazon is the best example. Amazon, in my opinion, is one of the best, if not the best company on the planet doing exactly that. The full text is as follows: to reform and to innovate. In the past few days, many people have sent me videos of Joe being interviewed. Some people said to me that this video is a great confession of our past mistakes. Yes, thank you, Joe, for your courage and responsibility. It's not scary to make mistakes. No one makes, I think this is just a bad translation. I think it's scary. It's not scary to make mistakes. Everybody makes mistakes. It's about admitting the mistakes that you've made and correcting your mistakes. I think that's the correct translation, but correct me in the comments down below. In the past 25 years, Alibaba people have achieved many successes, many innovations and leaders. However, we have also experienced countless mistakes in the past 25 years and will continue to make mistakes along the way in the next 77 years. Facing problems calmly is not to deny the past, but to responsibly find a way forward. Don't complain about the past or others. Times have changed. We must keep up with the times. Not only must we have the courage to admit and correct yesterday's problem in a timely manner, but we must also reform for the future. The core change this year is not to catch up to KPIs, but to recognize ourselves and return to the track of customer value. We are attacking the problems of large companies, returning from an organization with slow decision making to putting efficiency and market first, and making the company simple and agile again. Remember, just because the stock gets hit quite a lot doesn't mean that the company itself doesn't have a bigger reach now than ever before. So, in my opinion, when you become more agile at their current state, things can change quite fast with regards to the financials. Then it continues by saying here, our idealistic feelings and mission of making it easy to do business in the world will never change. But the new management has made various changes in the past year, not only to break through yesterday's solidified strategy, but also to build the future of Alibaba. He then continues to talk a bit about innovation, challenges, competition, new technological changes, etc., etc. I'll just end with this right here. The road to reform and innovation will never be accompanied by applause because we are changing our favorite bad habits and vested interest. The road is long, but we will not be alone if we walk together. In the future, we need to be more active and proactive in changing ourselves quickly, and we need greater reforms to build a vibrant future for Alibaba. Of course, being proactive instead of reactive is quite a big benefit. For those that needed a small reminder from last quarter's earnings report, so Taobao and Tmall Group only grew 2% year over year, Cloud Intelligence Group only 3% year over year, but the big winners here is the international side of things that increased 44% year over year, and the logistics network China up 24% year over year, local services up 13%, digital media entertainment group, the smallest part, increased 18% year over year. So total segment just increased 6%. Again, there is some weakness in regards to their Chinese side of things, well, locally in China, plus the cloud side as well has not really been growing as fast as, of course, the other top cloud companies. Then if we look at net income and diluted earnings per share or per ADS, that has decreased quite a lot, between 77% for net income and 68% for diluted earnings per share. This, again, is definitely something that needs to improve if you truly want to see this stock appreciate a lot over time. Now, other than that, they're doing quite a lot of share buybacks, they're paying a dividend, so they are now switching to, yes, returning some value to shareholders because they notice that, well, without the shareholders, the stock will stay depleted for quite a while. And of course, then the next step follows is actually performing in the business. Because then when that will happen, Wall Street will probably come back because Wall Street looks for ways to make money. Doesn't matter if you don't like the stock, Wall Street likes to make money, and so they'll pick up whatever they can. Now, looking purely at the stock right now, it's on a weekly RSI 37.6, not close to being oversold. Yes, we're on our way to that, let's say, short-term-ish downtrend, which we had higher lows back in January of 2024. So let's see if we can rebound off those levels right here. Of course, the next earnings report will come out, I believe, in the coming weeks or if I think a month or so. That will also be a catalyst for the short term for the stock. Overall, the 200-day moving average sits at $79.3, the 50-day one at 73.3, and the 20-day one at 72.72. So overall, we've got two strong voices for Alibaba that came out that talked about how the company is changing, how they're admitting their mistakes, talking about the competition, and especially Jack Ma, since even though he has no, let's say, official role in the company anymore, every time he says something, somehow the street is listening. So hopefully for the Alibaba investors, things are going to change. I know most of you are probably in the red with regards to Alibaba. It doesn't make sense, right? We looked at valuation, it's extremely cheap, but hey, that's just the way Wall Street and stocks work. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.